Money, in its earliest form, was not currency at all. Ancient civilizations used barter, exchanging goods like grain for livestock over millennia. This evolved into coins, paper notes, and eventually digital currency. Every transformation of money has brought humans closer to efficiency and, inevitably, to surveillance. Today, the world teeters on the brink of a cashless society, where every transaction is a potential data point. Digital payment systems have grown exponentially in the 21st century. Platforms like PayPal, Venmo, and mobile banking apps revolutionized how we spend and transfer money. Transactions once hidden in physical wallets now leave digital footprints, creating a permanent trail. Governments and corporations are learning to monitor these footprints, gaining unprecedented insight into personal spending habits. A cashless society is not just a technological trend, it's a powerful tool for governments. By moving transactions to digital formats, authorities can track every financial move. Tax evasion, money laundering, and illegal trades become easier to detect. But the question arises, at what cost to privacy and freedom? Corporations are not just passive observers. Tech giants, banks, and payment processors actively promote cashless systems. They design platforms that make digital payments convenient and addictive, subtly nudging society toward total transparency. Their influence shapes not only financial habits but also personal data collection at an unprecedented scale. With every tap, swipe, or click, personal data is harvested. Digital transactions reveal more than amounts spent. They map habits, routines, and even emotional states. As convenience grows, the cost is often invisible. The slow erosion of financial privacy, leaving individuals vulnerable to manipulation and surveillance. Cryptocurrencies promised a new kind of financial freedom, decentralized, anonymous, and untraceable. Bitcoin and other digital coins created a vision of independence from traditional banks and state control. However, as adoption grows, governments are finding ways to monitor, regulate, and even influence crypto transactions, subtly steering the very freedom it promised. The shift from cash to code is not only financial, it's technological. Artificial intelligence, blockchain analytics, and big data algorithms can monitor spending in real time. Every purchase, subscription, and transfer can be analyzed for patterns, providing insight into behavior, intent, and risk. In essence, every digital transaction becomes a window into human life. Advocates of cashless societies cite security, efficiency, and reduced crime as key benefits. Critics warn of a different reality: total financial transparency, loss of autonomy, and potential for abuse. The same technology that can stop fraud could also control how and where money flows, leaving citizens with little recourse against misuse. Throughout history, societies have witnessed the control of money as a tool of power. From coin minting regulations to banking monopolies, rulers and elites have always sought to monitor wealth. Today's digital surveillance is the modern extension of a centuries-old desire to observe, influence, and manage the flow of money. As we stand on the edge of a fully digital financial world, the stakes are higher than ever. Cash is disappearing, replaced by code, algorithms, and networks. Understanding this shift is crucial not only for financial literacy but for personal freedom. The journey from cash to code is more than technological. It's a profound transformation of society itself. Transaction monitoring is not new. Banks have long flagged suspicious activities, and governments have tracked large transfers to prevent fraud and money laundering. But today, technology allows surveillance at an unprecedented scale. Every swipe, tap, and online payment can be captured, logged, and analyzed in real time. Every digital transaction leaves a trail. Payment apps, credit cards, and online banking systems track the date, amount, merchant, and location. When aggregated, this data paints an intimate portrait of an individual's life, shopping habits, travel routines, even personal relationships. The footprint is permanent and accessible to those who control the networks. Big data analytics transforms raw transaction logs into actionable intelligence. Algorithms detect anomalies, predict behaviors, and identify risk. Banks use these systems for fraud prevention, while governments can monitor economic patterns and enforce regulations. In essence, financial activity becomes measurable, trackable, and controllable. Artificial intelligence can analyze millions of transactions in seconds. Beyond simple tracking, AI predicts behavior, spending tendencies, loan repayment likelihood, and even potential criminal activity. This predictive power turns everyday purchases into a tool for profiling and control, raising ethical and privacy concerns. Banks and financial institutions don't operate in isolation. International agreements and centralized monitoring systems facilitate the sharing of financial data across borders. Organizations like SWIFT and FATF coordinate surveillance, enabling a global view of individual and corporate transactions. This interconnected network amplifies oversight and control. Payment processors such as Visa, MasterCard, and PayPal act as intermediaries in the digital financial world. Every transaction passes through their systems, giving them unparalleled access to consumer behavior. Beyond convenience, this centralization creates potential vulnerabilities. data leaks, corporate surveillance, and regulatory oversight. In cashless economies, the absence of physical money strengthens monitoring. Governments can incentivize or restrict transactions digitally, enforce taxation automatically, and halt suspicious activity instantly. Control mechanisms extend beyond legal enforcement, shaping how people spend, save, and behave financially. With detailed tracking comes immense responsibility often ignored. Data breaches, misuse of information, and invasive monitoring are real threats. When every transaction is recorded and analyzed, privacy becomes a commodity, raising fundamental questions about freedom in the digital age. Cryptocurrencies initially promised privacy and independence. However, blockchain ledgers, while pseudonymous, are permanent and traceable. Advanced analytics can link wallet addresses to real identities, revealing patterns. Even decentralized finance does not fully escape scrutiny, as AI and data tools adapt to monitor crypto activity. The shift from partial to total transaction monitoring is accelerating. Governments, corporations, and technology converge to create a financial ecosystem where every payment is observed. Citizens must now navigate a world where convenience meets surveillance, and the challenge is to balance efficiency with privacy in an increasingly transparent society. Financial monitoring relies on the architecture of payment systems. Centralized systems, such as banks and payment processors, give authorities easy access to data. Decentralized systems, like certain blockchain networks, offer autonomy but still leave traces. Understanding the differences is key to grasping how money is tracked in the modern world. Central banks are the backbone of national financial systems. They oversee currency issuance, monitor liquidity, and regulate commercial banks. In a cashless economy, central banks can implement digital currency directly, giving them unprecedented visibility and influence over every financial transaction. SWIFT, the global messaging network for financial institutions, enables secure cross-border payments. Beyond convenience, it functions as a monitoring tool. Governments and regulators can access aggregated data to track global capital flows, detect suspicious activity, and even enforce sanctions effectively. Artificial intelligence has transformed how transactions are monitored. Machine learning algorithms detect patterns, anomalies, and even predictive behaviors. These systems can flag potential fraud or unusual activity automatically, enabling authorities to intervene before events escalate. Every transaction reveals insights about individuals, lifestyle choices, preferred locations, and social connections. Advanced profiling models integrate these patterns to build behavioral maps, allowing governments and corporations to predict financial behavior, influence decisions, and anticipate risks. The combination of banking data, payment apps, and digital currencies creates a comprehensive digital ledger. Aggregated data gives authorities an almost omniscient view of economic activity. While intended for security, this massive surveillance infrastructure raises serious ethical questions about freedom and autonomy. Monitoring every transaction requires ironclad security. Hackers and cybercriminals constantly threaten the integrity of financial networks. To counter this, institutions deploy encryption, multi-factor authentication, and AI-based defense mechanisms. However, strong security can also reinforce control, limiting citizen autonomy over personal finances. Corporations play a critical role in surveillance infrastructure. Payment apps, credit card companies, and tech giants collect and analyze vast amounts of data. They share insights with financial institutions and regulators, intentionally or indirectly, reinforcing a system where corporate and government interests converge to track every transaction. Legal frameworks like KYC, Know Your Customer, and AML, anti-money laundering rules require institutions to report and monitor transactions meticulously. Compliance software, integrated with AI, ensures that digital payments meet regulatory standards, further embedding surveillance into the financial ecosystem. As technology enables monitoring every financial move, society faces an ethical crossroad. Is it acceptable to sacrifice privacy for security and efficiency? Ethical considerations must address consent, autonomy, and the right to conduct personal transactions without oversight, highlighting the tension between convenience and freedom. Every digital transaction becomes a record. Over time, these records accumulate, eroding the boundary between public and private life. From daily purchases to medical expenses, financial data reveals intimate details, leaving individuals increasingly exposed to observation and profiling. A fully monitored economy affects more than privacy, it changes behavior. People may self-censor spending, avoid certain services, or modify lifestyle choices, knowing every move is visible. The social fabric adapts to surveillance, creating subtle but profound shifts in trust, freedom, and interaction. Sweden is pioneering a nearly cashless society. While efficiency and convenience have increased, concerns over privacy and digital exclusion persist. Small businesses, older citizens, and marginalized groups face challenges, demonstrating that technological progress can have unintended social consequences. Governments gain extraordinary power when transactions are fully monitored. Policies can control access to money, enforce behavior, or restrict freedoms. This raises the question: how much control should authorities have over citizens' financial lives, and where should the line be drawn? Corporations leverage transaction data to shape consumer behavior. Personalized offers, dynamic pricing, and targeted marketing influence decisions, often without transparency. In a monitored economy, corporate power extends beyond commerce into social influence and subtle behavioral control. Artificial intelligence amplifies surveillance capabilities but also raises ethical dilemmas. AI can predict, influence, and even manipulate behavior. Who controls the algorithms, and how do we prevent bias or abuse? Without ethical oversight, the very tools designed to protect can become instruments of coercion. Not everyone can seamlessly transition to a cashless society. Older populations, low-income groups, and those in rural areas may be excluded from essential services. Digital monitoring, while efficient for some, creates barriers for others, highlighting inequalities that technology alone cannot solve. Transaction surveillance can be misused for political control, discrimination, or personal gain. Centralized control over money leaves individuals vulnerable to arbitrary restrictions or coercive measures. Transparency and accountability are crucial to prevent abuses in a fully monitored system. As society advances toward cashless economies, the challenge is to balance efficiency, security, and convenience with privacy, freedom, and equality. Citizens, regulators, and corporations must engage in a continuous dialogue to ensure technology serves humanity rather than surveils it. Monitoring financial transactions is no longer a local concern; it has become a cornerstone of global strategy. Nations track cross-border payments, identify illicit activity, and enforce sanctions. Financial surveillance now serves as a tool of diplomacy, security, and economic leverage, shaping global power dynamics. Institutions like SWIFT and the International Monetary Fund coordinate global financial oversight. Through shared compliance frameworks, KYC and AML standards, they monitor global capital flows. These networks enable real-time surveillance of individuals, corporations, and even nations, creating a new form of financial geopolitics. Governments increasingly use financial networks to enforce sanctions. By monitoring transactions and freezing digital assets, nations can apply pressure without traditional military action. This demonstrates the strategic power of financial surveillance in controlling global behavior. While cryptocurrencies were designed to bypass traditional oversight, governments are catching up. Advanced analytics track wallet activity, linking addresses to identities. Even decentralized finance is increasingly monitored, creating a global ecosystem where privacy is carefully balanced against regulatory compliance. Countries collaborate extensively, sharing financial intelligence to prevent crime, terrorism financing, and tax evasion. This creates a networked global financial surveillance system capable of observing large-scale transactions and individual behavior across borders simultaneously. Artificial intelligence processes vast amounts of cross-border financial data, identifying patterns that humans could never detect. AI enables predictive models for risk management, policy enforcement, and geopolitical strategy, making financial systems smarter and more surveillant than ever before. Control over financial data translates into geopolitical power. Countries that dominate digital surveillance can influence markets, enforce compliance, and exert economic pressure. Transaction monitoring is no longer just about security, it's a weapon in global strategy. Redefining alliances in conflicts. China's digital yuan and social credit system exemplify the integration of financial monitoring with societal control. Every transaction is tracked, influencing access to services, loans, and opportunities. This model demonstrates the power of linking financial transparency with governance and social regulation. Global reliance on digital payment networks increases vulnerability. A single breach, failure, or manipulation could disrupt entire economies. Transaction monitoring, while powerful, introduces systemic risks that require careful management and robust safeguards. As nations push toward cashless economies, citizens and governments alike must understand the implications. Global financial monitoring reshapes markets, privacy, and power structures. Awareness, adaptation, and regulation are crucial to navigate a world where money is code and every transaction matters. The transition from cash to code is accelerating. Central banks, corporations, and tech innovators are pushing toward fully digital economies. The next frontier isn't just about transactions, it's about integrating AI, predictive analytics, and personalized financial ecosystems into everyday life, creating a world where every financial move is monitored and optimized. Smart contracts, embedded in blockchain systems, automatically execute transactions based on predefined rules. While this innovation reduces friction and enhances efficiency, it also creates a fully auditable trail of financial activity, allowing both corporations and governments unprecedented insight into personal and business finances. The convergence of AI, blockchain, and the Internet of Things (IoT) transforms everyday devices into nodes of financial intelligence. Refrigerators, cars, and even wearable devices can trigger transactions, all recorded, analyzed, and optimized. This ecosystem amplifies convenience but also deepens the reach of surveillance into private life. Empowerment in a cashless world begins with awareness. Citizens must understand how digital transactions are monitored, stored, and analyzed. Digital literacy allows individuals to make informed choices, protect privacy, and engage responsibly in a system where every transaction leaves a trace. Legal frameworks must evolve to safeguard privacy, prevent abuse, and maintain autonomy. Policies governing data collection, transaction monitoring, and AI use are essential. Regulations can provide transparency and accountability, ensuring that surveillance serves security rather than control. Individuals can take steps to protect their privacy, using encrypted wallets, anonymizing transactions, and understanding digital footprints. Personal vigilance combined with regulatory protections creates a layered defense in a system designed to observe nearly every financial move. Relying entirely on digital financial systems carries risks, cyber attacks, systemic failures, and algorithmic biases. A robust economy must balance innovation with resilience, maintaining alternative pathways to ensure individuals and societies are not fully dependent on a monitored automated system. The future of money could lead to unprecedented convenience, security, and economic optimization, a utopia of efficiency. Alternatively, unchecked surveillance and concentration of financial power could create a dystopia of control, where citizens' autonomy is limited. The trajectory depends on choices made today. Addressing the challenges of a fully digital, monitored economy requires international cooperation. Standards for privacy, ethical AI use, cybersecurity, and data protection must be harmonized. Global collaboration ensures that the benefits of digital financial innovation are shared while minimizing risks of abuse. The journey from cash to code represents one of humanity's most profound transformations. Financial systems are no longer simply about currency, they are networks of observation, influence, and control. Understanding, vigilance, and ethical oversight will determine whether this new era empowers society or constrains it. The future of money is here, and every transaction tells a story.